So we earn over 1 million per year in dividends, as you can see below, thanks to YieldMax and our other dividend paying funds. We're also up 26% for the year, blowing away all of the indexes thanks to YieldMax. And today we're going to dispel the myths surrounding YieldMax. Many people are complaining about ULTY's chart looking terrible, same for MSTY. Look at this downward sloping chart. A lot of people are complaining about these charts, yet we're still up 26% for the year. How is this possible? How do these YieldMax prices keep dropping, yet we outperform the indexes in the process? Well, again, I'm going to show you how I do that in this video. We're up 26% for the year, beating the S&P, blowing away all the indexes, quite frankly, and we do this using YieldMax, Cornerstone, Margin, and other dividend-paying funds. If you need help getting this kind of outperformance, email me for my e-guides at akintodd48@gmail.com or head to my website, Unconventional Wealth Ideas, where we're leading the FIRE movement. FIRE stands for Financially Independent Retire Early. You can learn all about my e-guides here and what I'm doing with YieldMax. Obviously, we're going to Costa Rica this month. We'll be doing some more coverage on some other lesser known funds that I actually own. I own some of these funds as well, so I can't wait to share with you those findings from Costa Rica. So today we're talking about YieldMax and how these funds move downward left to right on their charts, but yet we still outperform. How do we do this? Okay, we're going to get into that. Also, I'm going to be extending the Black Friday sale until the end of the month. Okay, so if you enter in promo code FIRE, you can get a 10% discount on my e-guides. Look at ULTY's chart. It's moving downward left and to the right. Look at MSTY. It's moving downward left and to the right. And also look at my margin debt. It's $716,000, but our dividends of over 1 million per year pay back that margin in less than a year. So I'm never worried about my margin debt, because not only will it go away with my dividends, but once the margin debt goes away, it then becomes, what are you actually holding in your account if you're not using margin? And I hold a lot of YieldMax, as viewers know. But how am I getting this outperformance with YieldMax? Well, I always start with Cornerstone. Okay, Cornerstone is a great example to demonstrate decay, quote unquote, with YieldMax. Look at Cornerstone's chart. Look at this 5-year time frame. Look at how it moves downward left and to the right. Okay, you can see that it was at 15, for example, here on the top left side of the chart, and now we're here at 7. Okay, how is Cornerstone outperforming? Okay, because you know that I put most of my money in Cornerstone. How is Cornerstone outperforming when it's moving downward left to right on its chart? Well, look at its 4-star rating here. It's 4-star fund on Morningstar, and look at its chart. Okay, its 10-year chart. It moves upward left to right. Okay, it's very simple. All you have to do is factor back in dividends for Cornerstone. Okay, so Cornerstone I anchor most of my account with, because obviously it's the indexes and it pays you a nice dividend, 20% dividend, and it drips that dividend down at the NAV. Okay, and we'll talk about that later on in this video. So if Cornerstone can move upward left to right on its chart, but here on E-Trade it moves sideways to down, how are people getting this wrong with YieldMax? Okay, my big question to all the YieldMax detractors are, how are you not factoring back in dividends? All right, go look at a chart of MSTY, for example. MSTY, as you can see here on Morningstar, look, it moves upward left to right. Now, it had a recent fall because MicroStrategy itself has been down, but MSTY is not to blame for that. Okay, MicroStrategy again has just been in a downturn. Look at the chart of MicroStrategy. You can see that it's down. By the way, I'm doing this regular video format because if I'm going live, a lot of members who just watch YouTube and go to the video section think that I have disappeared. They think that YieldMax has destroyed me. I've been ruined. They think that I'm cooked now. Well, you have to just go watch my live videos, everyone, okay? Please don't forget, most of my videos are done in the live section. I'm only doing this, again, for traditional viewers of YouTube who think that I've just disappeared, as I don't make long videos anymore. I only do lives. Lives are just more fun. Anyway, so MicroStrategy, look at the chart. It's been down, okay? So MSTY has been down. This is, again, not MSTY's fault. This is just a Bitcoin thing and a MicroStrategy thing. All right, so the thing with MSTY is you just have to factor back in dividends like I just showed you, okay? If you go look at the chart of MSTY on Morningstar, it's the same as the chart on E-Trade. I've been saying this for years, honestly, and ULTY is no different. ULTY is just the same thing, but on steroids. ULTY, it moves downward left to right, but if you go look at its performance on its YieldMax website, on the YieldMax website, you'll see here it was down 1% for the year, whereas Bitcoin was down like around 3% for the year. So honestly, ULTY has been helping me. It hedges all of its positions. You know that they've restructured. They have much safer holdings within their ETF now. And again, they hedge each holding. So ULTY is how I pay down my margin debt with my excessive dividends, and then we're not even really underperforming like you would think. Again, look at our performance. We're up 26% because ULTY's only down 1%, whereas MicroStrategy is down 50% from the highs, 50% plus. Okay, ULTY's actually been hanging in there pretty well. And it's diversified, so it fits with Cornerstone. Cornerstone's diversified and it's tied to the indexes. ULTY is diversified and it's tied to the indexes in a large way now. It used to have a lot of small caps, a lot more Bitcoin holdings. Now it has higher weighted names in the indexes, like NVIDIA, for example, semiconductors. You can go look at their holdings at any time on their website. And the key with ULTY is that it's 50% maintenance. So I don't think any of the detractors of YieldMax understand what this accomplishes for us at our channel, okay? Cornerstone is 30% maintenance, ULTY is 50% maintenance. So that's the key to living free out of my account. I put so much in Cornerstone because we fall with the indexes and we preserve all of our equity with Cornerstone, because look at our available withdrawal. Our account is over 2 million, but our equity is 500,000 that we can withdraw from. All right, so this is the key to living free out of your brokerage account. You keep your available withdrawal high, and that way you don't even get close to margin calls. A, you're falling with the indexes. B, but then C, these dividends pay down your margin so fast. But the key to doing this is keeping your available withdrawal high. If you put too much in ULTY or too much money in MSTY, not only is it going to take up 100% of your equity, but again, it's a stock. It's going to fall like a stock. So even though MSTY falls less than MicroStrategy on a down day, which is nice, it's still a stock, and you don't want to tie your account to stocks. You want to tie your accounts to indexes that have low maintenance, like Cornerstone. We also have other low maintenance dividend paying funds in my account, but Cornerstone is the largest because the 30% maintenance is hard to ignore, and you have the special drip and nav for Cornerstone, which again we'll discuss in 1 minute. If you need help understanding maintenance, see my e-guide, see volume 3, how to use margin to live free out of your brokerage account. All right, so maintenance is the key to everything, and staying indexed is the key to everything. And as I already dispelled, you look at the charts, they move downward left to right for Cornerstone, ULTY, and MSTY, but I showed you the Morningstar charts, and they actually move upward left to right. So where are the haters now? I've just shown you the evidence in front of your face, okay? I showed you the charts moving downward left to right on E-Trade, but on Morningstar moving upward left to right, okay? So what can you say about that? You just have to factor back in dividends. Now, if you've been buying at the highs in ULTY, buying at the highs in MSTY, well, then you only have yourself to blame. You don't buy high, sell low. You buy low, sell high. And we've been dollar cost averaging this whole time into these names, and now they're starting to bounce. I know a lot of people who sold out of MSTY right at the bottom, and I thought that was kind of tragic, because why would you ever sell this when it's a benchmark for Bitcoin? And now I'm not a big Bitcoin fan, but if you have Bitcoin, which we have about 5 to 10% of our account in Bitcoin, well, then MicroStrategy is a huge part of that. But again, it has 100% maintenance, so I don't keep too much money in it, and that's why I never had to sell in the first place. You have to follow all the rules when you're investing, okay? Another rule that you need to follow is dripping on dips for MSTY and ULTY. All right, if you drip on dips, you're going to improve your performance. If you have your account set to auto drip for everything, well, of course, you're going to be losing in these funds. You want to drip at the lows. That's why I like Cornerstone so much, once again, because Cornerstone drips at the lows for you, okay? It's the only fund out there that I know of that does that, okay? As you can see here, Cornerstone gives you a 21% dividend at its NAV, but it also gives you 20% premiums every month, okay? So it pays you these dividends, 20%, and sometimes you get 20 to 30% premiums. Sometimes north of 40% premiums are what you can receive when you're in Cornerstone, like in 2021. So that's how we drip and get ahead with Cornerstone. You have to play Cornerstone properly, because the rights offering, it is an advantage, okay? Up until a certain point, you have to know how to play Cornerstone, and closed-end funds like Cornerstone, just full disclosure, all right? When you buy my e-guide, you get free Discord for life. This is our chat room. We have over 3,000 members in this Discord chat room. And we alert you of the Cornerstone rights offering announcement here, okay, in our Discord. So when we got this alert, look at the date of this alert. You can see this date coincides with the top in Cornerstone. I just have to say that for the record, because I don't want y'all buying Cornerstone and then we, get close to the rights offering and then you don't know how to play it. Again, you have to play Cornerstone properly around the rights offerings. Look, we sold right here on the chart, and then we bought back here. All right, that's how I leveled up my account so fast, from 15,000, as I always say around Corona, to $1 million, essentially, okay? It was using Cornerstone and the triple C's. All right, if you need help playing Cornerstone, that's in volume 4. ULTY and MSTY, I don't drip them automatically. I drip them manually. Cornerstone, I drip automatically because it's always buying at the bottom. That's how you're going to get extra outperformance with YieldMax and ULTY and MSTY. And it's just really important that you know that when you look at the charts of ULTY and MSTY, they're falling. They're going down left to right. But if you go to Morningstar, you see that they're actually moving upward left to right. So what can you say now? Just make sure that you're playing these properly. You're playing these funds properly. You're allocating your money properly in them. You're dripping on dips. Okay, you're dripping on dips, not automatic, but you're dripping on dips, which Cornerstone does automatically for you. And make sure you're watching your maintenance. Okay, your maintenance is everything with these funds. All right. Also, keep in mind that you can hedge these funds. MSTY, you can hedge it with winter. ULTY, you can hedge it with salty. We also buy put options in our account so that we're hedged no matter what. Now, these puts that you see here, these are just sold puts. These are how I go long on the market. They lower my margin, they lower my volatility, and they increase my performance without the same risk as owning these in the market itself, because when you sell the option, you're going to get lower volatility, you're going to get the premium up front, and that's what they give you in exchange for taking the lower risk. So you can't make as much in these sold options because the upside is capped. So they give you a healthy premium up front in exchange for not being able to make as much money alongside. That's why they're so safe, because they just give you the premiums and they cap your upside, but they give you extra performance. It's very important. Look at these gains. We're up 1,500 in BidX today, for example, but in a down market, it doesn't move down that much because of the way that we sell these options. I also buy put options as a whole on my entire account. I use a small amount every month as insurance, and then that protects me in the event of a downturn. We've had these options be up thousands of percent in one day. That's what's so important about using margin. I don't really need the options anymore because my margin is low compared to my account size, and my available withdrawal is high because I use low maintenance names, but I also buy my put options and they hedge my entire account. Okay, that's in volume 5 if you need help buying put options. All right, so I think I've laid out all the facts for y'all. Okay, I can't keep doing this over and over and over. I know there are detractors of YieldMax. I know people mention me in other YouTube videos saying that YieldMax has let you down. I don't know what they're saying about me. I don't watch their other videos. I just see my members bring me the other videos from other YouTube channels, and I don't know why I even sit here and waste time responding to them, because I've already responded to them in the past, and there's nothing you can say. The proof is in the pudding. We're up 26% for the year, and when you go to Morningstar, you can see these true returns. Okay, you can look at the actual chart, and you can just see that if they're down, it's because Bitcoin itself was down, for example. And I look at that as actually an extreme opportunity to be buying more shares. But make sure you keep Bitcoin small. As I always say, professionals say 3 to 5%. I don't give financial advice. I can only share what works for me, and I keep most of my money in the indexes. That's how we outperform, okay? Even with margin, we're down 0.28% today. Look at that. Yes, we're down 8,000, but I don't look at the day's gains or losses. Look at all the gains we've been making in our live videos, by the way. Once again, head to my lives if you've been wondering where I've been at. But look at our losses. Yes, we also lose some money because the market ebbs and flows, but we're down 8,000. Look at this, 0.28%. Look above. The NASDAQ is down 0.47. The S&P is down 0.57. That's because of all of my hedges and my position size management that I work so carefully on. All right. And if you need help doing the same, getting this outperformance, email me for my e-guides at akatod48@gmail.com, or head to my website, Unconventional Wealth Ideas, where we're leading the FIRE movement. All right, I can't say enough about my FIRE community. I love them so much. You can see their testimonials here. When you buy my e-guides, you get my number and Discord access free for life. All right, don't forget, enter in promo code FIRE for a 10% discount, good until the end of the month. All right, and if you like the video, please click like or subscribe, and I'll talk to you soon, everyone. Thanks.